Dan Deming, a KKM Financial, is standing by with today's Trader Rundown.
Well, in evaluating this markets, I think it's very important that you also focus on the volatility expectations within the market. And you can do that by looking at the VIX index. And the VIX index is basically a measure of expected price movement within the market on any given day over the next 30 days. That's a general rule of thumb. And historically, the VIX typically holds right around 20, and that's basically a reference point, I think. So when you look at this market, if you see it below 20, that basically indicates that market makers aren't expecting too much volatility. The market is typically trending higher at that point. And when you see it over 20, the market makers and participants within the market are expecting the market to move more than what it typically moves on an average day. And when we do see the VIX pop up to very elevated levels, that's when you do see the markets really gyrating around. I can tell you that in March of this year, during the coronavirus pandemic, we did see it get to a high of 85. So again, that's an expectation of basically 4.5% to 5% move on any given day. So you can tell that we do see these extreme measures in the volatility measure, or the VIX index, that's indicating that the expectations are for the market to move at substantial levels on any given day over the next 30 days. And also during, I can also point back to 2008, when you look at the VIX during that time period, we did see the VIX push up to about 80 or 81 at that point. Now, I also want to give you a reference to 1987. If you really want to understand what the VIX can indicate, back in 87, even though this is before the VIX measure was officially being disseminated, if there was a VIX back in 87, it would have gone to somewhere close to 200 on that Black Monday. So again, even with these price movements that we've seen the last 30 or 40 years in the market, something like 87 still hasn't really surfaced in the markets since that time period. And even with the 08 situation or the pandemic situation, when we did see the VIX push up to around that 80 level, again, that's still quite substantially below what the market was realizing or expecting back in 1987.
Thank you, Dan.
Thank you.
For more Business First AM, check us out on social media. We're on Facebook, YouTube, and Twitter. And go to businessfirstam.com for where to see our show on TV.